Trump's tariffs mean for the dollar now? Now, as every week passes, something slightly different happens, and obviously I've been away. So, whilst I was away, of course, they did the deal with China, and so with China now, as you know, they've reduced those tariffs down to 30%. But within that 30%, there's still a 20% tariff for fentanyl. So that could easily get taken off, bringing China down to just 10% tariffs overall. Now, it looks highly likely, based on what's happened already with the UK, that tariffs globally, there is going to be a floor. And that floor is going to be 10%. So even with a 10% tariff universally, that still puts tariffs at the highest level since the 1940s, and that's still going to act as a drag on the economies. So, and also you have to look at the potential lacking of trust for other nation states towards the US. They still want to do business, of course, but just a little bit of lacking of trust. Oh, okay, what could happen next? That sort of thing. And so I think that we're in a period now going forwards where there's going to be more diversification globally away from US assets. Not massively, but enough to make a difference. And that difference would affect the dollar, because if there is a diversification just a bit where economies think maybe we shouldn't be quite as dependent on the US for our trade, maybe we should be doing some trade elsewhere as well, and investments as well, going elsewhere to even a small degree will affect the US dollar as monies come out of the US, and get invested and put to work elsewhere. So overall, I'm looking at this as a dollar negative, as monies do end up going elsewhere, and trade is done just a little bit more elsewhere. Still going to be a lot bulk of trade being done with the US, but it's enough. It's enough to maintain this general dollar weakness theme. So let's go and have a look at the chart here. This is the weekly time frame of the dollar, just to put it into some form of context to start off with. Let me just turn all my trend lines off for a second. There we go. So right now, in recent weeks, we've had quite a nice bounce over the last, 4 weeks for the dollar. Needed to have a bounce at some point. It fell from 110 to basically 98. It fell 1,200 pips in a relatively short period of time. So a bounce was always going to have to come, a bounce or consolidation at some point. Now, technically, if we look at it, it's come back up into this, up to 102. It's a decent historical zone here. So could it bounce some more? Yeah, it could do. Does it have to? No, it doesn't. The main point is what Trump's tariffs mean for the dollar. My view fundamentally is that they will be a negative overall for the dollar. In the short term, anything can happen. The inflationary impacts, we're already seeing we saw consumer sentiment report yesterday, and the inflation expectations shot up to over 7%. So the Federal Reserve at the moment have no interest in cutting rates anytime soon, and we're seeing the market repricing that in. So, however, it's a twin thing going on, because if there was a bit of a softening in the economy, and there may not be, but if there was, then the Fed have to look at that as well. So, of course, with inflation, potentially inflation rising, I know at the moment the inflation reports have been coming down. The PPI this week came in a lot lower. CPI last week came in lower, but they're backwards facing. They're from a month ago, or the last month. So going forwards, are we going to see these pricing pressures build because of the whole tariff war that have been going on? So so that could lead to certainly the Fed just staying on the sidelines for longer, which in a way could be supportive of the dollar. But there is a flip side to that, is that this lack of trust going on, and we saw this with the UK as well in 2022, could still ultimately have an impact on the dollar. So technically, yes, anything could happen in the short term. But let's have a look at this. So like I've already said, that 102 that we've bounced into, it's a nice level. Could we bounce a little bit higher up into this zone? Yes, we could. But ultimately, what has happened? We've broke down, the dollar broke down, below the key 100 level, which had formed much of the base of the prior 2 years. So we've broken down through there. I do not see this as a false break. I do not see this as a false break, and then we just come all the way back up again, because we've already done that up here. So, and that was our false break. So I do see this as just the heads up really of what's probably still to come. So it's just a case of timing. How long does it take? But ultimately, yeah, Trump's policies, I am seeing a weaker dollar overall. It's just a case of how long does it take. Could we just chop around for a while as the market absorbs the moves that we've done? But ultimately, going out over the next year, 2 years, I see a weaker dollar right now. Of course, anything can change in the markets, and that's our job as analysts to adapt. But the fundamentals and the technicals do add up to a continued weakness in the dollar over the next year or two, and maybe even beyond that. But that will do for now. Have a lovely weekend. I'll see you next week.